Good evening, everybody. Sorry for the delay. Once again, we're going to do a quick little promo would be the best word. We've got a training session coming up this weekend. And it's one that I've been putting together for quite a while. And essentially, it's identifying the high profit signals and patterns. And the reason it becomes so effective is we know that out of these high profit signal patterns, there's expectations. And that's exactly what everybody's learning is not only what do they look like, but what are the expectations coming out of them. So we are going to be going through a process of looking for the best or going through the best signals and patterns. The one question we always get asked when I do sessions like this is because we've narrowed down the 50 or 60 signals down to the 12 major signals, even people ask, well, which ones of those are the best? And the answer on an individual basis is they're all about the same, except for the kicker signal being stronger. But there are combinations of the signals and patterns that produce extremely high probability trades, number one. Then on top of that, they produce high profit trades. So not only are we finding trade setups, again, remember these trade setups are coming from a consistency that will last for the next 500 years, and that's basically human nature. So because we know the criteria of each signal, we can pretty much identify which methods or identify what market direction is going or doing, whether it's heading up, heading down, or heading sideways. We can, on an upward price move, we can find the most powerful bullish signals and patterns. And here's a few of them. These are what we're going to be going through this weekend. And the reason they're the most powerful is because of the strength of the signals and the consistency of the signals. So we're going to be delving into things that you've already gone through, but we're going to go into them with much more detail. For example, your best friend. We know if we analyze what a best friend signal is, it's based off a doji. And we know the doji rule, that if you see a candlestick sell or a doji in the oversold area followed by a gap up, that's your best friend. Let's see, maybe it's, I hope it's not my microphone. So these are what we're looking for. Now, why are we setting them up this way or setting up this training session this way? Is because every time we go through one of these sessions, again, there's our best friend signal and a morning star signal. These are the things that we're trying to identify. And for a very specific reason, there's your left-right combo, smack dab on the T-line. The reason we're identifying these is, as I mentioned, we go through charts, and at the end, we always have people say, well, shoot, there's so many of them. How do you know which ones to pick out? And that's where we're going in the opposite direction. We're going to start from the top down and identify the most powerful signals and patterns, like the kicker signal, so that we can identify which ones we want to go after. So that if we are looking at 50 or say 20, 30, 40, 50 good chart patterns on any given day, you don't have to sit as the best. We're going to be going through the 13 or 14 signal and patterns that are more powerful than the rest of them. And then in this 4-day or 4-hour training session, not only are we going to analyze each one, because what we've discovered, or what I've discovered anyways, is that the more we keep going through this, the more the more you start recognizing which patterns and signals work consistently and produce the strongest gains. So um, I too are having sound issues. Oh, I don't know why that's happening. Might have to log off and log right back on again. So the reason we're uh, doing this training session is for two things. One, so that you can recognize and understand why those are the most powerful, so that when you start looking for signals, we can scan. We'll be showing how to do the scans on most of these. And then the kind of the, what do I say, inherent spin-off of knowing which ones are the strongest signals and patterns, you get the spin-off of refining your self-discipline. That we cut out the emotional trading. When we start applying very simple candlestick applications, not only are you learning which ones are the strongest signals, but you're also kind of getting self-taught as to what you need to do based upon improving your own trading training, I guess is kind of a redundancy. And so this isn't merely just pointing out which signals are the best. It's also going to be a process of saying, all right, once you know these signals, you're also going to dramatically improve your trading ability or your training for strong signals and patterns. So I think, yeah, Becky, go ahead and put the link in again. Let me see. Yeah, so again, this is a 4-hour training on Saturday. And it's, again, to kind of reinforce things that you already realize or already have acknowledged as we go through charts day after day, but it's going to put a much more firmer grasp on why they work so uh, so well. So, and again, the reason we do it in a 4-hour session like this, not sure what it is. So with that, let me bring up live charts. All right, hopefully. So once we go through that understanding, what your visual analysis becomes is, all right, what signals are setting up and is it creating a pattern? And with that, that's where you know what your expectations are or what your high probability trade setups are going to be. All right. All right, so here we are back to the market indexes. Today, as we saw, it was trading lower. So why was that kind of anticipated? Because you can see that this move right here is about the same magnitude as this move right here. And when did this move start? When it broke out through the wedge formation. And how did it break out through the wedge formation? By one of our strongest signals, a doji gap up, best friend, breakout. And what other attribute could we put in this chart that told us that that was a high probability trade setup? The fact that they bounced off the 50 and went through the top of the the top of the channel or the top of the wedge formation. And what are we now seeing in the NASDAQ? Well, we've had a doji, a hanging man doji, and today they sold it off and closed below the T line. Then what's that pretty much telling us? Well, this told us there was indecision. The stochastics are starting to roll over. Where did this indecision occur? Right at about the same level they topped it out before. Mara, the T-line is the 8 exponential moving average. It's called the T-line because it's got a very simple concept. If you see a candlestick buy signal and a close above the T-line, you can pretty much stay long until you see a candlestick sell signal and a close back below the T-line. Let's see, let me get to another chart here. So the reason that the market wasn't selling off was because, or a hard sell-off, or that it was a reversal. We could see what was happening in the transportation index. It was still trading positive. Yeah, on which one, SP? Back on the NASDAQ? Yeah, that's probably a viable target. So what is this all implying on a visual basis if we know what this indecision tells us? That more than likely we're probably backing off. Where is it backing off? Got either the 50-day moving average or, whoops, this is another indicator. If you put a trend channel in here, might be into this area. Now, does that matter where it's going to go to? No, we don't know whether it's going here or here or here. All we can utilize the candlestick signals for is if it gets here and does a hammer signal and bounces back up, then we know the bottom of this channel is acting as support. We get down here and do a doji and it trades positive, we know the 50-day moving average is acting as support. We may not necessarily know where it's going to move to, but we've got much more clear vision of, based upon the nature of each signal, where it might be bottoming, and we start either closing our short positions and then going long again. Okay. So for those trading in the options room and the futures, we're still short lean hogs. Now again, this is where you observe the obvious. The obvious was the downtrend started up here at the 50-day moving average with a bearish engulfing signal. May have covered shorts here, and then when it gapped back down, went short again. May have covered short positions in here, but when they showed they couldn't get back up above the T-line, went short again. Now where are we? Well, we broke this level. Could be heading back down into this area. On the long side, we've been getting into December wheat because there was your bullish engulfing signal. And then since then, it stayed up. So Friday, what is today? A couple of days ago, it looked bleak, but it didn't close below the T-line. And notice what this 3-day pattern is, our morning star signal. What did that tell us? That more than likely there was more upside. So once again, is trading futures easier to have a trend up or down? Usually, Carol, because there's less influences. Whereas you got all sorts of things that can affect a stock price, futures or currencies, they don't have as many influences. It might be rain for wheat. It might be obviously the supply of cattle or supply of hogs. It doesn't have a whole lot of outside influences. It's usually just supply and demand. Okay, so when we're in a market condition where it looks like it's a little bit iffy and it might be rolling over, that's where you want to be a little bit more scrutinizing on your positions. Like our CRC position, we can see what's happening here relatively easy. You got a big fry pan bottom, then you've got your J hook, and this is where you observe the obvious. Notice your morning star signal right smack dab on the 50, starting the next leg to the upside. And so as we go through knowing what human nature does, and the T line is kind of a Fibonacci support and resistance level, a natural support and resistance level of human nature. When you combine that with candlestick signals, which are the graphic depiction of investor sentiment, you add those two, you got a very strong trading platform, which works extremely well because it's using the most basic of all indicators, which is human nature, which works the same time after time. And we also have some very simple rules, again, on the T line, that if you see a buy signal and a close above the T line, you can stay long until you see a sell signal and a close below the T line, with the caveat being the further away you move from the T line, the higher the probability it's going to come back and test it. Oh, I meant to show the other moving averages. Frank, you can use whatever time frame you want. This could be a 10-minute chart, a 1-minute chart, a 30-minute chart, a monthly chart. It's all based upon which time frame you want to trade. I used to trade the E-minis off the 1-minute, 3-minute, 10-minute chart combination. Right now I trade futures if I'm trading during the middle part of the day off the 10-minute chart. When I'm ready, the 10-minute chart looks like it's setting up, I'll flip to the 5-minute and then the 1-minute chart. No, we're not, SP, we're not trading the T-line. We're not trading crossovers. We're trading the signals. Everything else just becomes a confirming indicator. Could a doji represent a bullish and bearish engulfing? No, the body is too little. It's the doji followed by a bullish engulfing that is your strong signal. That's your left-right combo. All right, so anyways, so that's kind of the criteria. If we know exactly what happens in human nature with a high degree of probabilities and use the T-line, which is kind of the Fibonacci support and resistance, we can make much more educated investment decisions. We can see what's happening in Hertz. Obviously, there's a trend channel. There was our bullish engulfing signal. There's our doji sandwich, which is a strong signal. A bullish candle, a doji, and what's our simple rule of the doji? If it opens positive the next day, it's probably going to move positive this same magnitude as this day right here. And if that's the case, what do we know about our T-line? It's probably going to close up above the T-line. So if we're looking at this chart, what can we kind of anticipate now if you went long Hertz? It's probably coming back up to test the top of the trend channel. Oops, hold on, I gotta. And so we've been long. Whoops. Oh, pshaw. And again, this is all simple analysis. There was our gap up. There was our evening star signal. There was our wedge formation. When it broke out, what's our next plausible trend analysis? The 45 degree. We had a shooting star. Now we have a doji. We're getting toward the overbought area. This is where, if we know that these are potential sell signals, we can pick a spot that tells us it shouldn't be trading that opposite direction. We might put a sell stop just below today's low. If it starts trading down through there, the probabilities are pretty strong. But after your shooting star and doji, they're taking profits and probably heading back to the T-line. Again, these are based upon human nature reactions and the high probabilities of what's going to happen next. And the reason we're looking at these signals is because the Japanese race traders over 400 years identified where human nature changes and what signals they create. Once again, here's our best friend signal, doji gap up. How long do you stay long until you start seeing sell signals confirmed? Where do you think it's moving back to? The T-line. Now, look what we have here, a Morningstar signal. It started to do a doji sandwich today. But even though today's magnitude of trading wasn't the same as the first candle, what was the implication here? That they supported on the 50, closed above the T-line. More than likely, it's got the prospects of moving higher. It didn't trade positive. It started dumping at the open. GBT. You've got to look at what the trend is for this one. Which direction is this one moving? It's not moving anywhere. So if you had bought long, where would you have been back out of this trade? It shouldn't have come back down through, especially the low of the doji. So just because, if you're moving sideways, so this wouldn't be a good chart to even think about trading until it breaks out this way or breaks down this way. Mike, a white soldier is not a candlestick. They've been talking about that quite a bit in the chat room recently, that everybody's saying, oh, one white soldier. This is what you consider one white soldier. It opens positive from the close of the previous day and moves up. Except when they started mentioning that, in all the years that I've been doing candlesticks, which unfortunately is way too many, I have never seen a one white soldier as a signal. All that signal is a bounce telling me when you get to your first resistance level, you start watching. You start watching to see what happens at that resistance level. The second thing today also was that if this opened positive and you saw that the market was trading lower, you don't have to jump in, because you want to stay around a little bit or watch it for a little bit to see whether they're taking it up. The fact that they started trading it off with the market soft, I told you, you didn't want to be buying just yet. I guess if somebody could help Boris. All right, so let's get back on track here. Oh, CORI. Now, this has been a nice fry pan bottom, a little J-hook pattern. But what did we have today up here in the overbought area? Long-legged doji. Now, remember, if a doji means indecision, a long-legged doji means more indecision. So we've got a very easy exit strategy. If it opens lower tomorrow, you take profits immediately, because that's exactly what the doji rule is telling us. And the fact that they did a long-legged doji told you there's lots of indecision up here. So there's a couple ways to exit. We'll do this some night when we do our entry and exit strategies. If this opened positive, it better trade positive. If it opens positive, where's the first place you want to put your stop? Probably right here at this open of the previous day, because logic says if it opens positive and starts trading down, this indecision has told us that they're starting to sell off. And if they open up here and start trading down here, what do we have going on? A bearish engulfing signal after a doji. So being able to anticipate or know what signals are occurring and when, for example, here was our hanging man signal in BLCM. That broke out of a little wedge right here. Where was our next target? The 200-day moving average. Then we had a hanging man. If you didn't start closing it out on weakness after the hanging man, the ultimate spot to close it was at the low of the hanging man. That would definitely tell you the hanging man was confirming. So these are all just simple rules of when to get in and when to get out of positions. Now, while we're looking at some charts, let's look at the biggies. Here's Apple. When it gapped down, notice slow curve, they're still selling this off. Where's the first target? Probably right about in here to fill this gap. Where's the next logical target? The 50. I meant to go back to this. Usually I have the 20 on here. I just don't, just to kind of keep the charts clean tonight. The 200 and this is the 200 simple moving average. This is the 50-day simple moving average. Sometimes we have the gray line on here, which is the 20-day simple moving average. And those are on here because every major money manager around the world uses those to make their decisions about their trading. And they act like targets because everybody's watching to see what happens at those levels. The T-line works effectively, but you got to remember, hardly anybody, if anybody, has that on their charts. So with it acting so effectively to demonstrate a trend, the T-line is more like a Fibonacci natural support and resistance level. So here's Amazon, also now in a downtrend because you had the bearish Harami. Make this a little bit steeper. You're selling below the T-line, and your stochastics is still heading down. Where's your first target? Right here. Second target, the 200-day moving average. Nugget is another one where you had the dark cloud gap down. And that, not only is that a reversal signal, but when they gap it down the next day, what are they telling you? Telling you the sellers will want to participate or get out of this trade as fast as they can. And notice what's happened to Nugget. Just has not been able to close back up above the T-line. And today it told us they weren't going to do any support here at the 50. So that is probably a function of gold. Also, did the doji gap down? Now we're down here at this level, the 50-day moving average. Eric, I'll get to Netflix here in a little bit. If you hold off on your individual ones, I will get to them when we get done. I'll tell Jim to do the double line, and then you put in your request. So right now, gold is still trading lower. Is it going to support here? We don't know. It looks like stochastics still have a little bit more downside. Labu, the biotech, got a little bit soft today. What did it tell us about this pattern? The fry pan bottom did not break out today. Tells us it's going to be sluggish for a little bit more. Tesla, a left-right combo. There's a little kicker type signal that told you the force of the sellers are taking control. Where's your next likely target? Also the 50-day moving average. So these are all indications that if the market's getting soft and some of these biggies are selling off, NVIDIA, the only positive on NVIDIA today was it came back up and closed above the T-line. And so if this opens lower, where's our next likely target? Probably back in this area at the 50. And what would this become up here? That's your island reversal. probabilities are Lauren, the 8 exponential moving average, the T-line, has Fibonacci characteristics, not a Fibonacci indicator. Fibonacci characteristics in that it's got a natural human support and resistance aspects to it. And that's essentially what Fibonacci numbers are in nature anyways, that there's a lot of things that fit with the Fibonacci numbers. For example, I think one of the things is leaves have a 38% angle from each spine in the leaf, that type of thing. So it's kind of a natural, human nature, natural support and resistance level. Okay, let me take a look at a few here. I see Netflix on the list. So here's where you observe the obvious. This is because everybody else can observe the obvious. Oh, I thought we did have a Fibonacci expert just in the last couple of weeks, didn't we? You can see the trend channel. And there's your trend channel. You can pretty much draw a parallel line through the bottoms and the tops. And notice what you had right here, bullish Harami. And notice the pullback. Pullback was very indecisive. You could tell that because each day was an indecisive trading day. And then we had a gap up from the Harami. What's that tell us? They were anxious after the signal told us the selling had stopped. They are anxious to get back in. So what assumptions can we make? They broke this downtrending channel. They started buying on this support level. Where's our next target? Probably back up to the top of the channel. SUM. This is observe the obvious also. A doji gap up, your best friend. Doji sandwich. What do we expect from a doji sandwich? More upside. If they opened a positive today, what do you want to do? You want to be buying immediately because it was telling us they broke out through this level following bullish signals. So essentially knowing what occurs or what the expectations are following specific signals and patterns just puts you in situations where the probabilities of being in the right place at the right time is much greater. So here's the fry pan bottom. Here's a strong price move. Notice the pullback, very indecisive. If it opens positive tomorrow, you can be a buyer because what type of pattern would be setting up? Be setting up our classic pattern, which is a combination of a fry pan bottom that produces a strong price trend and a positive open telling us that we're in our next wave or our J-hook. What's the prerequisite for a J-hook? A strong price trend, a pullback, support usually on the T-line, and then get ready for the next price move. It can be a cup and handle, but usually a cup and handle is more here and then here where it's not breaking out yet. A classic is where it does break out, making your fry pan bottom a strong move, and then pulling back. So there's not too much difference, just that usually you classify the classic as a little bit stronger because it is a strong price move following by a J-hook pattern. Square, yes, we just did square. So this is what we expect coming out of a fry pan bottom, the good strong price moves. Now remember, we do a lot of teaching saying, all right, we're looking for candlestick buy signals when your stochastics are in the oversold area. But when it comes to patterns, where do your patterns usually break out? When your stochastics are showing you already up in the overbought area. So that's the type of thing that we're going to be analyzing so that people don't have to worry about. There's a difference between a pattern breakout and you see a gap up that tells you there's probably a strong price move versus a steady uptrend and then the gap up. I can't remember which one. No, that wasn't it. If you have a good steady up move and then a gap up, that's usually the exhaustion of the top. That's different than a fry pan bottom breakout. Now, this is Netflix. You can see where they pulled back to, right smack dab to the 50. What told us that there was a good strength starting off the 50? Again, there's one of our most powerful reversal signals, the left-right combo, then followed by positive trading the next day. So this helps investors that aren't locked into methods that say, all right, you wait, the reversal is confirmed after 3 days, 5 days, 2%, 4%. A lot of people ask, how many days does it take for your signals to confirm or your patterns to confirm? And the answer is 0. If this is our buy signal, if it opens positive the next day, what's it doing? It's already confirming. We're buying immediately. CRTO. So there's a big, huge left-right combo. A doji after gapping down and a big reversal. That's probably a good indication that they've changed investor sentiment. So if it opened positive, what's that tell us? That they're confirming the left-right combo signal, number one. And number two, they're telling us the T-line's not acting as resistance. At least we can figure that the next target is bouncing back up to the moving averages. Is that a big percent move? It's about 10%. But it also gives us the opportunity that if it gets up here, we can see what type of signal or pattern occurs at the potential resistance levels. If it goes through, we know we have more upside. If it fails here, we're out. So we've had a bad trade that, or not a fulfilling trade, but we still made 7-8% on the trade. And we're also looking for the high probability pattern setups. We know what a J-hook pattern is, but we know where it works more definedly, that's the right word, where we fail at a resistance level, they pull back to the T line, and then come back up through this level. There's a J-hook pattern with a much greater definition of where the first level ran into resistance. So notice the doji sandwich, it took this right up smack dab to the 50. They pulled back. Now they've come back up through. You can be a buyer on this pattern breakout because it's a bobble J-hook pattern. Hold on, we've got Very here in a little bit. INO. Again, there's your bobble breakout. Where's your next likely target? At least up here to the 200. So once we can identify, or once you can identify which signals and patterns work the best, now you can greatly limit or I want to say pinpoint where you want to have your trade money. Look at the left-right combo. Where's the first target? The 50. What happened when it got back to the T-line? A bullish harami. Where were we buying? Right here. Because we had that bobble breakout. And how long do we hold on to this one? As long as we don't see a sell signal and a close back below the T-line. So I always keep mentioning that this is not rocket science. This is just identifying what the Japanese rice traders have pointed out to us that human nature does time after time. So here's this Very, VERY, started the uptrend. Now what do you do with this one? This one's gone from 10 to 53. See if just a big breakout move. And what would keep you in this? The fact that they couldn't close it below the T line. Now that becomes a very relevant factor, because what happens to most people? Oh man, I bought this at 12 and now it's trading at 18. I better take my profits. So they're making their decisions not based upon what the chart is telling them. It's what their emotions are telling them. Boy, I better take profits because I sure would look stupid if this turned around and went back to a loss. Candlestick signals and the simple confirming indicators puts you in situations where the old adage, cut your losses short and let your profits run. This is one of the aspects that allow you to let your profits run. But now notice what's happening. T-line's here, we're trading up here. If it started shooting up tomorrow, much further away from the T-line, what's the logical thing to do? You flip to your 10-minute chart, because we already know we're way too far away from the T-line. Watch your 10-minute chart. When it comes down through the sell signal down through the T-line on the 10-minute chart, you start taking profits. Why would you start taking profits without seeing a candlestick sell signal? Because you know you're that far away from the T-line, more than likely they're going to come back and test it. Yes, so Raman, this is what we're looking for. This is why we want to identify the signals and patterns that produce the probabilities of being in these trades. Now, are you going to always hit big trades like this? Definitely not. But when you identify what's happening based upon investor sentiment and know what your signals and patterns are telling you, at least you're in situations where the probabilities of what's happening. I don't think we recommended it. I think there's been a lot of discussion. People have been trading in the chat room. And that's the advantage of our chat room, is that you got people looking for the same type of pattern and signals that are going to confirm. So even though I put out 2 or 3 stock picks every day, those might not be the ones that work the best. You've got experienced eyes in the chat room that are constantly looking for good signals. You always will have more trade opportunities than you'll be able to handle, which means now you can cultivate the process so that you're in the best trades. You could have, but yeah, notice what happened. Even if you came out right in here, you were buying back, knowing that they didn't close below the T line. All right. You can. That's one of the indicators, is when you see a breakout on big volume, that big volume is telling you there's new ownership, and that's it's not a primary indicator. It's kind of a confirming indicator that the signals are working. HCLP. There's your big fry pan bottom. There was your breakout. This one you just stay long, because you're still in this fry pan bottom. And where does the breakouts usually occur? Usually where the pattern starts and when your stochastics are already in the overbought area. Winnebago, there's your classic fry pan bottom, J-hook pattern, and notice how your J-hook pattern started with a dragonfly doji gap up, your best friend. Where did it occur? Right smack dab off the T-line. When you're buying near the open or selling near the open, usually I'll give it, if it's a day where you can see the pre-market futures are going to open up the market 100 points, and the stock that you're following has a good bullish signal the previous day and it's opening positive, it may only take me 30 seconds to get into that trade. On the other hand, if the market's opening lower and the stock that you're trading is opening higher, might just sit there and wait a little bit to make sure everything's moving in the right direction. And that little bit could be 90 seconds, 5 minutes, 30 minutes, 45 minutes. Where is the buy entry on a fry pan bottom breakout? Right about where the pattern starts. And when they break through the beginning of that pattern, that's usually where you want to be buying. I don't know. Last HCLP. Yeah, so this one's right about where this pattern is starting. Kind of on a little J-hook type pattern. So if it started acting strong here, you want to go after it. Even though your stochastics are showing you're in an overbought condition, you know what to expect coming out of a fry pan bottom breakout. As you can see right here where you got a J-hook pattern and they're breaking it out. That's on ERF. There's a big fry pan bottom in Eames. That's been touted around in the chat room for the last few days. Because once you start recognizing what the pattern should be doing, know that you've got a much higher probability of being in the right place again at the right time. Go through some of these real quick. DM, kind of a fry pan bottom, J-hook pattern, and notice where it started, right off the 200, back up through the T-line. Let's see, we did this one. That was the first one. And EOS, there's your slow curve. That's one of your most powerful breakouts. I use this quite often. When you see that slow curve breakout, usually you're going to get a big price move. Sometimes it's only in 1 or 2 days that you get huge price moves. Whoops. Now we got a big hammer signal, bullish confirmation. So what do you have occurring now? The potential of a J-hook pattern. NGVT. There's your inverted hammer, one of the 12 major signals. Did we do that the other night? Last night? What is today? Tuesday night, we did that one. And notice where this all occurred, smack dab off the 50. Oh, Sean, I think there might be, that's something you ask in the chat room tomorrow, here in the chat room. But notice where this started back up. Right off, buy signals right off the 200. Why do we make that more compelling? Because if you're a major money manager, where are you going to start buying? At support levels. Same scenario for our reason to be buying Weight Watchers. Right off Morningstar signal, right off the 50-day moving average. Slow curve, fry pan bottom, breakout on Blue Buffalo pet products. If this is wave 1, this is wave 2. Wave 3 should be the same magnitude as wave 1. And Cito was something that a few of the people in the chat room was again, here's very simple entry and exit strategies. There's your left-right combo. There's your scoop pattern. Bullish confirmation the next day, you can be buying. Then notice where you were up here. If you were astute, when you were that far away from the T-line, go to your 10-minute chart and start taking profits. Or if you held on to it, it needed to open positive and trade positive. If it opened positive, where was the logical place to set your stop? At the close or the open of the previous day, because if it came down through there after opening positive, what type of candle would you be witnessing? A bearish engulfing signal after. So where's your next target right now? More than likely they're coming back to test the T-line. So same scenario on the short side as long side. But if you start seeing sell signals, you get ready to start going short. You're looking for breakdowns. So Juno, look at your kicker type signal. Remember, what is one of our strongest uh, individual signals? The kicker signal. Closed here or opened here, closed up here. The next day they gapped it below where they opened it the previous day, tried to take it up, and came back down. So this type of day gives you an excellent entry strategy if you're going short. If they opened here and started trading up, nothing major. But the fact that they gapped down was kind of your alert. Just put your sell stop right here to go short, because if it comes back down through there, it's telling you the sellers have taken control. Just a high probability entry spot. We've still got some SPWR, because once you had the doji gap down, there's just been no buying. They could never get it back up above the T line. Let's see, go was one to illustrate that when you see that doji gap down, there's usually going to be more downside. So when you see that doji gap down, it's usually going to be more downside. What's the magnitude of this downside? Well, if this is wave one, it's for wave three to come down here, giving you a good 35% downside, upside as far as the downside. U.S. Steel, again, there's your doji gap down. If this opens lower, what's it tell us? They're still selling it off, and they're not supporting at the 50-day moving average. Anytime you see that big gap down, usually there's going to be some more follow through. There's your bearish doji sandwich through the T line, through the 50. And what do we know about a bearish doji sandwich? Usually implies there's going to be more to the downside. That becomes a good prospect for a short. When you start seeing sell signals, now your evening star signal, look at your kind of your tops up here. It tells me if they open this lower, they're taking it down to where? Probably our targets. There's a gap to fill right here at the 200, possibly going to the 50. Eat Foods, same scenario. Big dumpling top, doji sandwich. If this was wave one, wave three could bring you all the way down here. So basically what we're looking at is things that give you high probabilities of, if you see sell signals, look at the series of dojis, and then they've told you which way they're going. The Cassic's heading down. The probabilities are pretty strong. You're heading lower on this one. Yeah, when you start seeing the tweezer tops, that's more indication that the sellers will probably be taking control. And there's your bearish harami. If it opens lower the next day, what do? You close it out. Where's the likely target? Back to the T line. When can you buy? On the next buy signal? No buy signal. Now you have a doji gap down. You're still heading lower. There's your first target. And then potentially all the way back down to the 200 because you still got a lot of juice left in your stochastics to the downside. Light, look at your evening star signal. In this same range where there's lots of junk going on, then the signal tells you there's now a lot of force to the downside. FN, there was your shooting star doji, left-right combo. What's this tell us? Wave one, wave two, going into wave three. And AKAO, wave one, bearish J-hook pattern, kind of a doji sandwich. So what do we got here? We got a little resistance level right in this area. But if it opens lower, what's it tell us? We're probably now heading into wave three to the downside. Anyways, because we know what to expect based upon the signals and patterns, it just allows you to be prepared for the high probability trade setups. And not only being prepared for the high probability trade setups, but situations where your upside potential based upon the correct candlestick signals puts you in situations where you're not, when the market's in a steady uptrend, you're not in an uptrending stock. We're finding the ones that are going to move faster just as long as there isn't any change of investor sentiment. Okay, so with that, again, this is the training session for Saturday. All right. Are there any general questions on candlesticks? Can't have an X mass rally if the market is at an all-time high. Well, I would just say you're at an all-time high for a reason. So just because you're at a high doesn't necessarily mean it can't go higher. How do you look at gaps that price is coming into? Any concern that the gap in Hertz is just above or it's most above the signals? Well, yeah, rule of thumb is they'll fill the gap. Well, Shuzbus, what am I doing here? This one's, yeah, that's not a gap that's far away. Or right now the pattern is your main criteria. What does the bellwether? Oh, the one that I use the most, the kind of the one that's kind of the main frame of the my trading during the day. What happens if there is a doji between two large red candles? That's your doji sandwich. Back to time frames. When looking at the T line, now they're moving averages. They changed based upon the time frame, 1 month, 10 days, but they're still all relevant to that time frame. And so they're all, remember, if you just repeat the candle or the definition of candlestick signal, which is it's the accumulative knowledge of everybody buying and selling during a specific time frame, that time frame doesn't matter. If you're trading E-minis real quick, you might use the 1 minute, 5 minute time frame. If you're a swing trader, you might use the daily. And then if things get too far away from the daily T-line, you flip to your 10-minute T-line or 10-minute chart. How does next Saturday's training differ from the content of the Ultimate Candlestick Training Package, which I bought yesterday? Marcos, I don't remember what we have in the Ultimates. Becky, do you have the answer to that? I think I don't have the answer to that right now. The Dragonfly Doji bullish in itself, or do we need to apply Doji rule to define the bullish or bearish? Yeah, the Dragonfly Doji in the oversold area is like the ultimate hammer signal, whereas the Dragonfly Doji at the top of the trend is your ultimate hanging man signal. You can use weekly charts. Some people use weekly charts today, even if you're a swing trader. you look at your daily chart and trade off of that, but then you use your weekly chart to kind of confirm that the daily charts are moving in the right direction. Barcos, I think those links are in the your morning and afternoon comments. My stochastics are 12.33, and that was nothing more than sitting down one night 40 some odd years ago and saying, all right, where's the ultimate bottom, and what correlates with the ultimate bottom, and where's the top, what correlates with the top. And 12.33 worked better for me because I'm a swing trader. My trades usually last anywhere from 2 to 10 trading days. What is the candlestick pattern called on NVIDIA? The most recent. That's what you call an island reversal, where they gap it up. You can kind of draw a circle right around this. So this is an island up here. So if this opens lower tomorrow, you can be shorting NVIDIA. More than likely, it's heading back to the 50. On Hertz, yeah, but you're buying Hertz not so much because of the gap here, but because of the overall trend and the pattern setup. Please explain how the stochastics come into play, and is it a secondary indicator or must coincide with a candlestick signal? Usually you want to, obviously a candlestick buy signal in the overbought condition doesn't mean very much. A candlestick sell signal in the oversold condition doesn't mean very much. What we're looking for is a candlestick buy signal in the oversold area, and we're looking for candlestick sell signals in the overbought area. A swing trader, Carol, is somebody that trades relatively quickly. Again, my average as a swing trader, my average trade is usually anywhere from 2 to 10 trading days. A scalper is somebody that scalps very quickly each day. I mean, they might scalp for a few pennies. A day trader, obviously, is in and out during the day, maybe in and out a few times during the day. Okay, yeah, the ultimate training package is more going through the basic signals, which is kind of what we're doing on a week-to-week basis. If you understand what is involved in each signal and the psychology that created that signal, you've got a much more powerful grasp of what's going on in the trend. Z, my charts on the 1 minute chart, this could be a 1 minute chart. They look exactly the same. Yeah, 12.33 works for scalping, but if you're trading real quick, you might use a combination of a 12.33 and overlay it with a 5.22. The 12.33 telling you what the short-term trend is, and what the 5.22 telling you what the immediate trend is. Oh. Okay, is that it, Becky? All right. Okay, I guess with that, Jim, go ahead and do the double line. And in 2.6 seconds, do the next double line. Herbalife short. I would go short if it came back down through, let's say, yesterday's low. Telling you that it's still heading in that direction. I'd want to see it break down. Otherwise, you're still in this just slowed downward drift. ALDR. This had the T-line crunch. Notice how the T-line crunched the price right up through the resistance level, the 50. All you can do on this one is stay long as it stays above the T-line. Whiting came back up above the T-line. Another one where you just stay long as it stays above the T-line. Notice kind of the little scoop pattern right here. And OCLR did the bearish engulfing signal right smack down. If you're short, you can stay short. You definitely don't want to be long this one right now. Wynn Resorts, nothing. I wouldn't be long or short. Now, if this opened, yeah, you could go short if you see the market opening up weak and this opens up weak. There's a gap to fill right here, and then possibly your 50-day moving average. EXC, notice today it came up, tested the T-line and failed. You're not quite in the oversold area. So if I was short, I'd stay short. I'd probably still use the T-line, though, as my stop. Fitbit, I wouldn't be long. And I probably wouldn't be short. I wouldn't be long until you saw a confirmed buy signal close up above the T-line. NAC did the hanging man. Hanging man doji, and then it traded back below the low. I'd be out of this one. The stochastics are heading down, and you're not showing very much force. It did have kind of a little breakout here, but it's failed the breakout. So that's the other aspect of candlestick signals is not only does it tell you when to be in trades, but it shows you how to get back out of trades quickly. The old concept of cut your losses short, let your profits run. Candlestick signals make that much more clear to get out of the bad trades and move on to something good. VRX, you can be buying this one, except you've got kind of a little wedge formation. You can buy it on strength. You just have to watch to see what happens once it gets to the 50. We were going to buy QEP today. It didn't execute. However, look at your pattern. Fry pan bottom, morning star signal, bobble breakout. If this opens positive tomorrow, you can be buying immediately. AVAV, right now you stay long. I'd stay long. I wouldn't want to see it move back toward the T line. CYRX, notice how when it came up, it moves sideways right to the T line again. Stay long on this until you see a sell signal. Macy's, you can go short on this one. Bearish Harami, Doji gap up, evening star type signal. They can bring it back down here to fill this gap. It won't be a big percentage move, but it'll be heading in the right direction. Yeah, MDXG did a big doji. So if you were short, again, notice how far away it moved down here, away from the T line. If you'd been short, that's where I would have gone to my 10-minute chart and watched that. If you stayed in it, to stay short, it has to open lower and trade lower. If it opens lower, you put your stop at the doji, because if it comes back up through there, it's going to create a bullish signal. And TSS, morning star signal. Where's your next logical target? Top of the trend channel. And VAC, Marietta. Yeah, you won't make a whole lot of money with this. You can be buying on the breakout. I wouldn't want to see it close halfway back down this candle. That would put you right back into the trading range. EFX, If you're trading long, just be very diligent when it gets to the T-line. See what it does at that level. We do Fitbit. Fitbit, don't buy until it gets back up above the T-line. MDXG, did we do that one? Yep. Am I going backwards here? MYOK. Another one that you can stay long as it stays above the T-line. Apparently right now it's going to be doing a very slow uptrend. Oops, is that the right Google? Google came back up. Doji right here makes it very simple. If it opens positive, they're taking it up. If it opens lower, they're still caught in this sideways trend. You would probably want to go elsewhere. Port, left-right combo today. Bearish doji sandwich. You can get ready to short this one on weakness. UTNT, there's your bobble setup. You can get ready to buy this one. If I was buying this one, I'd have a buy stop just above today's high. That would tell me it broke out to the upside doing my bobble breakout. And TSRO, this is why you watch to see what happens at the resistance levels. If you're long, I probably wouldn't be long or short this one. There's just not enough direction to it. Is this what you're looking at, or are you the NASDAQ? No tweet atop here. NQ. Nothing there. I don't know which symbol. BABA, not very exciting. You can see this one, if you're long, has to open positive tomorrow. If it opens lower, it's going to move in the direction of how they open it after a doji, giving you a doji sandwich. So we did Labu. Just Boeing can stay long as it stays above the T line. Tata. It's hard to trade because it's traded overseas, but you're probably in the bobble. If you're in it and it opens lower or trades lower tomorrow, I'd close it out, and then I'd just be ready to buy it if it's coming back up through the 50 resistance level. That one's not coming up. Avis, stay long. Especially if they open up positive, you have your doji sandwich breakout, probably putting you back up into this trend channel. So you stay long as this stays up above the T line. Nice fry pan bottom on this one. Just make sure your volume is hefty on this price stock. But you've got a good fry pan bottom. Let's see, HRTX. Nothing. Wouldn't be long or short this one. Just no direction. GPro. Another one that has to open positive. If you're long on this one, you should have been out yesterday. But now, if it opens positive after gapping up from the close yesterday to the open, if it opens positive, you've got a bullish flutter kicker kind of confirming your J-hook pattern. ENV, just stay long. When it broke out through this area, all you can do is stay long. But you're in the overbought area, so you always put a safety stop. At this point, I'd probably put a safety stop at today's open. because if it came back down through there, that would be an indication that the bears have started taking control. AVEO, nothing right now. You can see the wedge formation, so it wouldn't be long or short until they break out one way or the other. M-chip, this was another example that if you have a doji in the overbought area, your safety stop should at least be at the low of that doji. Because if they come down through there, they're telling you which way they're taking it. Right now, I wouldn't be long or short this one. You can go short, but I'd probably be more apt to go short if it came back down through the low of today. BSTM, you can get ready to go. Well, you can't go short because it's below $5. You shouldn't be in this one. You can see all the indecision up here. Now they've told you what direction their decisions. They're probably bringing it back down to fill that gap. FANG is still in this 45-degree. Safety stop at today's low. It shouldn't come back down through that direction. AMD, you can stay long, but if it opens lower, they're probably coming back. Remember, anytime they break through a resistance level, they'll come back and test it to see if it's going to act as support. So if it opens lower tomorrow, probably a good indication they're coming back down to test that level. Doji. I'd put your sell stops just at these lows right here. If it comes this way, you know which way they're taking it. GE, very slow moving. Boy, it's just so slow moving. If you like it, you can be buying it, but obviously you have to wait to see what they do right there at the 50-day moving average. Harmony, whoops, Helios. You stay long, but same scenario. Put your stop right here. If it comes down through there, they're coming back to test the T-line. They should stay in this 45-degree. HPJ, another one that's not very exciting. It needed to open positive and trade positive today. You should be out of it. RADA, same scenario. If it opens lower, you're back into the trading range. This is your best friend signal, so you definitely want to see it open and trade positive. Or if it does a doji type day, get ready for the double doji setup. That one didn't come up. LPX, there's your J-hook pattern. Doji, best friend gap up off the T-line, stay long. Safety stop at today's low. This one you can stay long as it doesn't close below the T-line. SPPI, stay short. You can see the slow curve, and where did this stop the uptrend? At the bearish engulfing signal. Now you can go short with the prospect of it coming back to test the 50. If it goes through the 50, next target is filling the gap down in this area. What if Win opens higher tomorrow after a long-legged doji? Yeah, if it has to open higher to stay long. If you're long, if it opens lower, you want to be out of it. Remember, it's going to move in the direction of how they open it. Labu, a little bit sluggish. Needs to trade positive tomorrow. If it trades lower, you're still in the sideways mode. And Nugget, still trading off. Use the 50 as support. I'm sorry, resistance. Getting right back here in the congestion area. Stochastics in the oversold area. So you start watching for buying down in this area. AAOI, If you're long, it has to open positive tomorrow to stay in it. If it opens lower, it's lost its oomph after the doji. Oops. Yeah. You just stay long. Boy, yeah, you're in a uptrend. Obviously, you want to see it trade higher. If it opens lower, then you decide whether you come out of it and see if it's coming back to the T line. Ooh, let's see. What's the other link, Becky? Oh, it's in the email. All right. Weibo, stay short, especially if it opens lower tomorrow. Steve, I don't know which one you're referring to as the dark cloud. On Macy's. No, remember, a dark cloud is at the top of the trend. That's not even a dark cloud. Remember, there's a dark cloud. It opens above any of the previous day's trading, and this would be a dark cloud if it closed more than halfway down that candle. Hive, you can buy this one on positive trading. That would be your bobble breakout. And we did GE. That's very slow. Again, kind of your ultimate institutional trader. Oh, the Qs, still no, yeah, tweezer top. Tweezer top is when you see out at the top that 2 days in a row or 2 days very close to each other top out right at the very top of the trading range, same level. So BlackBerry, big breakout, except statistically, if this opens lower, you close it out, and then your next buy as it comes back up through the close of the big move. Whoops. RMBS. It has to open positive. Again, there was the ultimate stop right there on the doji in the overbought area. It shouldn't come back below that level. Now, if you stayed long, it needs to stay above the T line, which means it needs to open positive tomorrow. Okay, I guess that's it for the night. Whoops, maybe not. Let me scroll down a little bit. When you say low, do you mean low of the body or the wick? On a doji, at the low of the day, the very bottom of the wick. You short biotechs? I usually don't, just because they've got too much whipsaw. It only takes a little bit of an announcement to send one of those skyrocketing. Shooting star on edit. If it opens lower tomorrow, again, look where the shooting star occurred, right here. You take your profits. Another nice little T-line crunch, fry pan bottom. You stay long on this one. I think we did Herbalife. Herbalife, you can short it if it comes down through these levels right here. Otherwise, looks like you're just in a slow drift and you're already getting close to the oversold area. Did we do MBOT? Fry pan bottom. Yes, you can buy this one on positive trading. This is La Quinta. You just stay long as it stays above the T line. Okay, everybody. Yeah, again, we're going to have the 4-hour training on Saturday. And hopefully, like we try to stay in our modus operandi, you're probably going to get a lot more information than you expect. So with that, everybody have a good evening. Oh, wow, it's 9:35. We'll see you bright and early in the chat rooms tomorrow.